Yeah. Recording. Okay. Okay. So some of you text me regarding the whether today got class or not. Okay. uh, Probably we got class today since Sony online. Yeah. But somehow I know some of you gonna go shopping today. Yeah. And start journey. Yeah. Go back to hometown with your families, friends. Yeah. So I try to finish around 1 hour, and then you can go back. Okay, you can go balik kampung and so on. Okay, and go shopping. Okay, how many now? Okay, all right. Okay, so today we gonna discuss about the chapter 2. Chapter 2 is regarding the Chapter 2 is regarding the okay, central bank and the monetary system part 1. Okay, so next week we're gonna discuss about the part 2, central bank and the monetary system. Yeah. Okay, I share screen. Okay, share screen, share screen. So if let's say your friend is not around, but you can listen back to the recording. Okay. So topic 2 is regarding the central bank and the monetary system part 1. Yeah. Right. Wait, I take the pen. Where's my pen? Okay. Thanks, Mr. Okay. 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 Your friends text me. Hope to finish your class early. Boy, cut you je. Okay. Okay. Right. So you can see the screen, is it? Okay. So what does it mean by central bank? When you see the word central bank, what comes first into your mind? What does it mean by central bank? Okay. How is a central bank um, uh, uh, run the business, for example? Why central bank exists? Why central bank is important? Try to answer why central bank is important to all the country, for example. Not necessarily in Malaysia, in other country also. Central bank is one types of institutions that very important for the country. Why? Why they exist? What happen if let's say we don't have the central bank? If let's say we don't have a central bank, what happened to the economy, country economy? What happened to the financials and so on? Okay, try to answer that. Okay, so when we talk about monetary system, so what does it mean by monetary system? I use other colors, color, color, color green lah. Okay. What does it mean by monetary system? Okay. When we talk about monetary system is a set of mechanism used by whom? By government. Why government use monetary system? To achieve what? To achieve the goal. What is the goal? To achieve the stability in economy, stability in financials, and so on. So usually government use monetary system to issue money in particular economy. Who are the player involved under the monetary system? Example, commercial bank, central bank. So why monetary system is important? Why government use monetary system? Monetary system related to what? Money supply, is it? Money supply. If let's say money supply circulate too much in market, what happen? Okay, when money supply circulate too much in market, what does it mean by that? It means that people refuse to hold the currency. Example, Ringgit Malaysia. If Ringgit Malaysia circulate too much in market, what happened? What does it mean by that? It means that they refuse to hold Ringgit Malaysia and they supply Ringgit Malaysia. When they supply Ringgit Malaysia, what happened to the currency? What happened? Because of no demand, they refuse to hold. So Ringgit Malaysia will drop when it reaches a certain point. Somehow, okay, when the demand for Ringgit Malaysia increase, it means that people keep demand and keep asking to hold the Ringgit Malaysia. What happened to the Ringgit Malaysia at the end? Money supply will reduce. What happened to the Ringgit Malaysia? It will appreciate when it reaches a certain point. So what we can say, monetary system is a set of mechanism used by a government to issue. If my handwriting's not clear and you not understand, please, you can ask me to improve my handwriting. To issue money in a particular economy. Actually, I plan to do the chapter 3 also today, but somehow when some of your friends text me since you said you on the way go back to balik kampung and then um, go shopping and so on, so it's okay lah. I decide to do the to run the to finish the chapter 2 only today. Just a chapter 2. Okay, so who are the players involved? Players involved is central bank, examples, commercial bank, and so on. Okay, so this is how. Okay, structure of banking system. What does it mean by structure of banking system? Why banking system exists? Banking system exists because we need a standardizations. Okay, we need one institutions. Yeah, we need one framework. So then we have a guidance, we have a rules, we have a structure rules, we have a structure framework. So then all the players involved, especially financial institutions itself, for example, commercial banks, yeah, they can follow. They have a guide. They have a way how to do, what to do, and so on. That's why we need a one unit standardizations institutions that all the financial institutions in that particular country will follow. So then anything goals aim, especially in terms of economy, financial, can be achieved smoothly. Okay, so when we talk about structure of banking system, we know first thing first, without banking structure, without the manageable system, what will gonna happen to the economy? what will going to happen to the financials? A lot of issue might be occur. What kind of issue? Example, fraud, money laundering. So all these things actually will give an negative impact towards the economy, especially financial. Okay, so that's why we need one structure framework. So then all the financial involved, they have a guidance, they have a rules that they have to follow. They cannot obey that. So in the banking system, the main authority is a central bank. In Malaysia, who are our central bank? Bank Negara Malaysia. So who are they? They are institutions. They exist because they set rules and regulation in banking system. And they also responsible to control the supply of the currency. But why they exist? They exist because they are one institutions that can prevent any issue, illegal issue that might be happen in banking system. So do the central bank important? Yes. They are being designed to oversee the banking system and regulate the quantity of money in economy. They're responsible to control the quantity of money in economy. Why? Because like I said to you just now, increase in money supply. What happened? Currency will drop. Drop in currency meaning people refuse to hold the currency. But when demand is there, the currency, when reach a certain point, currency will appreciate back to normal. Okay, so what is the responsibility as a central bank? They're responsible to set rules and regulation and they're responsible to regulate the quantity in the economy. Okay, so like I told you just now, they exist because they're responsible. When they exist, we can prevent from any illegal issue. What is the illegal issue? Example, fraud, money laundering. Yeah, because fraud, money laundering will give a negative impact towards the economy and a whole economy system, country economy system. Yeah? Prevent from any illegal issue might be happen. Okay. Okay. So this is how. Okay. So they're responsible to set the rules and regulation in banking system and control the quantity of money in economy, especially control the supply and demand of the currency. So who are the financial institutions? All financial institutions, compulsory for all the financial institutions at the particular country to follow rules and regulations set by central bank. The central bank is a hub, central structure for banking system. Okay, so who are the financial institutions? Example of financial institutions in Malaysia, we have commercial bank, investment bank, insurance companies, yeah, and so on. They are private owned institutions that serve general public. They are also intermediaries that stand between several from whom they accept deposit. Example, central bank. Investor to whom they make loan. Who are the players? For example, borrower and investor. From whom? From, let's say, they are financial institutions in the middle. Okay, this is a saver. This is a borrower. They will channeling the fund from saver to borrower. So then we can achieve a soundness of financial system. And so on. Okay, so who are the saver? Investors, household, and so on. Okay, what is the functions of central bank? Central bank exists because of the aim and goal is to achieve a soundness of financial system and to achieve the stable in economy, and they're responsible to enhance the economy. Number one, they're responsible to control the issue of notes and coin. What does it mean by that? Notes and coin is a legal tender, buying, selling goods, to exchange goods. Too much money that printing in the country. What happened to the money supply? The probability of money supply circulate much in market is huge, increase. So when the money supply too much circulate, what happened to the currency? Currency will drop. So that's why they need to control the issue of notes and coin. The printing money just now. Control credit money created by bank, the money supply. What does it mean by here? Loan given by bank. To whom? To household. Yeah? Money loaned out by bank. By bank. Too much money lending to people. Money supply will, if let's say too much, money supply will increase. When money supply increase, when we reach a certain point, currency will drop. Okay. Number three, central bank, the responsible to control non-bank financial intermediaries that provide credit. Example, insurance company, mutual fund, pension fund, which is non-bank financial intermediaries. They are not allowed to receive or to accept deposit from public. Okay, non-bank financial intermediaries are not allowed to receive deposit from public. Example, pension fund, insurance company, mutual fund, and so on. Number four, I try to slow down so then you can take note. Functions of central bank, they effectively use monetary policy tool or strategy to control credit expansions, liquidity, and money supply. Under what? Under three monetary policy strategy tools, which is OMO, discount window rate, and reserve requirement. So these three is a strategy under monetary policy to control money supply. Since we know money supply circulate much in market, it will give a negative impact towards the currency exchange and so on. Okay. Next, central bank responsible to prevent financial crisis. How? Usually, central bank, they have one unit, research unit, to see thoroughly how is the behavior of the market. So if, let's say, when they thoroughly investigate, they can see abnormality in market, so they will take a necessary action to prevent any issue before the issue occur. They prevent first. Okay, so financial to oversee financial sector to prevent financial crisis. So central bank, they act as lender of last resort. What does it mean by lender of last resort? Lender of last resort mean, as a central bank, they're responsible to give a solutions, to give a hand to help to all the members of central bank. If member of central bank, they facing problem in term of what? In term of management, not necessarily in term of financial itself. It include financials, management, advising, a forum, or any informations that need by the members of central bank, and compulsory for the central bank to give a hand to help if member of central bank they facing problem. The responsible also to prevent panic withdrawal. Panic withdrawal related to what? Related to bank run. I remember last week I told you I wanna explain about the bank run. Okay, what does it mean by bank run? Why bank run happen? The bank run happen because of loss of trust to financial institutions, especially bank. When the client, when the customer of bank, they lose the trust. They not trust the bank anymore. So they will panic. They will do the panic withdrawal. Example, okay? Panic withdrawal will lead to bank run. Panic withdrawal lead to bank run happen. Bank run happen when it reaches a certain point, bank will bankrupt. Bank bankrupt will not give an impact towards the bank itself. It will give an impact towards the whole economy. Anything related to the financials will not only affect and give an impact towards the institution itself. It will give an impact and effect to a whole economy and financial. Okay? So bank run happen because of what? Okay, let's say when example, okay, let's say the example, Maybank. You know Maybank. Who are Maybank? Maybank is commercial bank. Let's say Maybank, okay, let's say there is a rumor saying that Maybank will bankrupt. So we as a client, we as a customer, and we have a saving with Maybank. So as a customer of Maybank, do we worry if in case Maybank bankrupt? Yes, we will worry. But this is only a rumors. Rumors saying that Maybank will bankrupt. Somehow, for us, even though this is the only rumors, do we will getting worried on that segment? Yes. So because of that, we as a client customer, we will go to bank and keep draw the money that we deposit and save just now. So when everyone go to bank and we keep draw the money, so what happened? Bank running out the cash flow to run the daily business. So when they running out the cash to run the daily business, what happened? They will lose the ability to running the business, is it? So when they reach a certain point, bank run happen. Okay. So bank run happen, it will give an impact towards the whole economy system. Okay. So, but somehow nowadays we have a insurance, PIDM. Compulsory for all the financial institutions, especially bank, to have the insurance, PIDM in Malaysia. But somehow, okay, do central bank will can the, okay, the question is, even though we have an insurance, okay, PIDM, do the bank run may and may not be happen again? The answer is it may happen. It may happen, even though we have an insurance, because of the uncertainty, unnecessary issues and so on. So it might be happen even though we have an insurance, but somehow we can prevent it. We can prevent it. Okay. Okay. Next, act as a government banker. Act as a government banker. Central bank responsible to act as a government banker. Example, to pay the salary to whom? To government servant, for example. Act as official agent to government in dealing with gold and foreign exchange matter. Okay. Next, objective of Bank Negara Malaysia. So why they exist? Why Bank Negara exists? Bank Negara, why they exist? Okay, the importance of existing of Bank Negara Malaysia as a central bank. Because we're trying to achieve a standardizations, so then all the financial institutions, they have a guidance and set rules and regulations, so then we can achieve a soundness of financial system and soundness of financial structure. First, objective of Bank Negara, they exist because they are responsible to make sure we achieve a monetary stability and soundness of financial structure. Existing of Bank Negara Malaysia because they are standard, they are institutions, they are central or hub to all the financial institutions. So they act as a banker and financial advisor to the government. Bank Negara Malaysia also responsible to issue currency. So who control the currency issuance? Bank Negara Malaysia. Bank Negara Malaysia. What does it mean by issue currency? The money printing. Because why? Why we have to control the currency? Because too much money printing. Money supply will increase. Money supply increase. What is the impact? The impact is currency will depreciate when it reaches a certain point. So that's why we have to control the currency issuance. So who control it? Bank Negara control. Bank Negara also keep reserve as a safeguard the value of the currency. What does it mean by that? It means that to control the money supply. So as a financial institutions, especially bank, compulsory for all the bank to keep some reserve. Some reserve is a portions from the asset that they cannot lend it, they cannot use it, they cannot do anything with this portion. They have to keep as reserve in the institutions. So bank cannot use these portions of asset, they have to keep as reserve. This is one of the way how the Bank Negara control the money supply. Increase the reserve, what happened? Money supply will be controlled and reduced. So currency will stable. Next, Bank Negara Malaysia also responsible to influence the credit situations to the advantage of the country. Okay. Form of economy policy, we have 5. Monetary policy, fiscal policy, exchange rate policy, price and income policy, and national debt management policy. Okay, we go through one by one. Through one by one. Number 1, monetary policy. When we talk about monetary policy, this is the strategy to control the money supply. So what is the three strategy under the monetary policy? OMO, discount window rate, and reserve requirement to control the money supply. Because since we know money supply circulate much in market, it will give an impact towards the currency exchange, increase or drop. So under the monetary policy, it refers to the action taken by central bank to influence the availability and the cost of money and credit by control measure of money supply. Now, I told you about the money supply. So this is the strategy used by the government to control money supply and give an impact towards the currency exchange. And how far the level and structure of interest rate. When we talk about cost of money is actually referred to the interest that could be earned. Cost of money refer to the interest that could be earned. From the money interest. Example, securities, time deposit, or any investment. Okay, so when we talk about money supply, it is a strategy used by the government to control the money. Okay, example OMO. We know OMO is a buying and selling of government securities in the open market in order to expand or contract the amount of money in the banking system. Okay, so we will go through one by one about the strategy later. Now we discuss about the 5 form of economy policy first. Okay, when we talk about fiscal policy, so what does it mean by fiscal policy? Okay, fiscal policy is also one of the strategy used by the government to control the economy. Usually, they use fiscal policy is used by the government spending and taxations to influence the economy. Okay, used by government government spending and taxations. To influence the economy. Okay. Usually, government used to promote strong and sustainable growth to reduce the poverty and so on. Usually, fiscal policy used by the government to stimulate growth by reducing taxations and increase spending. So to stimulate growth, usually government will reduce the taxations and increase spending. This is how government used to stimulate economy. Number 2 just now is what? Fiscal policy is used to promote strong and sustainable growth. Okay. Okay. And usually government use fiscal policy to stimulate growth by reduce taxations and increase spending. So under the fiscal policy, we have two during the expansions and contractions. During the expansions, fiscal policy mean higher government spending relative to taxations, and during contractionary, fiscal policy mean raising taxations and cutting spending. During the expansion, during the deflation, usually during the economy in a good conditions. Expansion, during the economy in a good conditions, usually government will lower the taxations, encourage more spending. So people will spend more because tax reduce during deflations. During contractionary, during the inflations, usually government will increase the taxations and people will reduce spending. So this is how. Okay. Example. Yeah. Okay. Let's see. So what is the differences? Try to see what is the differences between monetary policy and fiscal policy. Okay. When we talk about monetary policy, and fiscal policy. Okay. When we talk about, okay, what is the similarities? When we talk about monetary policy, by whom? By central bank. Fiscal policy, by whom? By government. So under the monetary policy, usually the strategy is changes in interest rate. Okay. But under the fiscal policy, it is changes in tax and government spending. Under the monetary policy tools or strategy, the actions result are fastened. Somehow under fiscal policy, it takes longer period to see the impact or to see the effect. Okay. Usually under monetary policy is to control the inflations. Okay. the strategy, the goals of fiscal policy is actually to achieve a full employment and economy grow. But somehow, what is the similarities goal? The similarities goal is, between these two, is to achieve stabilize in economy. Stable in economy, to promote growth, and short and long term. Okay. Economy. This is the similarities, goals, and achieve how what they gonna achieve actually. Okay. Exchange rate policy. When we talk about exchange rate policy, what does it mean by that? It's a two country currency exchange. What does it mean by that? It means that to what extent the currency will be changed and how much. To what extent currency will be changed. How much? Okay. Why currency exchange important? Currency exchange important for whom? For import-export, for example. Investment. And so on. Okay. Usually, under the exchange rate policy, they target a particular value of the country currency exchange rate. Thereby, they will influence the flow within the balance of payment. What does it mean by the currency exchange? Currency exchange, the determinations of exchange rate of the country. Currency exchange is they determine the exchange rate of the country. Okay. Balance of payment under the demand supply, import export, and so on. Usually, exchange rate may use in measurements such as exchange rate control, import tariff, quotas, and so on. So this is how the country control and manage its currency in respect to foreign currency, convert the money and so on. Okay, so this is I think about the exchange rate everyone know. Okay, we have everyone got idea how to answer about the exchange rate between two countries. Okay, price and income policy. Okay, when we talk about price and income policy, price is in terms of what? In terms of goods. Income, salary will give an impact towards the pricing. Example, salary increase. For sure, the price of good will increase. Okay? Without government control, what happened to the price? The necessity product, for example, flour, oil price, egg, what happened? A rice, what happened? The price of the goods will keep increase and cost of living increase. It will give a burden to whom? To us, to the household. So that's why here the government control is important. So price and economy policy controlled by government is actually to influence the inflation rate by means of either statutory or voluntary restrictions. Inflation increase means cost of living increase. Okay? Statutory is Government controlled by law. Voluntary, meaning the price still in boundaries. Okay, give me 1 minute, wait. Okay, so this is how. Example, increase in income. What happened to the demand of product? Demand for product will increase. So what happened to the price? Price will increase. So what happened to the inflations? Because of that, inflation will increase. So we need statutory or voluntary restrictions to determine the wages, dividends, or prices. For example, at what level it should be. In Malay, they call it garis panduan or guideline. Okay, so we need to statutory or voluntary restrictions. Okay. So we know statutory is a government control. Voluntary still in the boundaries. The price still in the boundaries. Okay, national debt management policy. Okay. Under national debt management policy, it is a manipulations or adjust of the outstanding stock. Who control it? Government adjusts. Of debt instruments held by domestic private sector. Debt instrument is a government bond or stock. So what is the objective? The objective is to influence the levels and structure of interest rate and availability of reserve asset to banking system. Example, if the number of stock increase, okay, if let's say the number of stock increase, supply increase, dividend will low, and reserve asset increase. Example, if number of stock increase, okay, so if let's say number of stock reduce, what happened? Supply will reduce, dividend will increase, reserve asset will reduce. Vice versa. It is vice versa. So this is how. Any questions so far? Any questions so far? Okay. If let's say no questions, okay, proceed with the money supply. Okay. When we talk about money supply, okay, we have M1, M2, M0, M1, M2, M3, M4. Yeah. This one is not important for midterm or final exam. Just go through. Yeah, not important for midterm or final exam. No need to memorize this. Yeah, money supply is divided into multiple category: M0, M1, M2, M3, M4. So when we talk about M0, it's the narrowest measure of money stock. M1 is a narrow measure. M2 is an intermediate measure. M3 is a broad measure. M4 is the broadest measure. So we go one by one. When we talk about definitions of money, because of this is the narrowest measure of money stock. This is kind of sterling notes, coin in a circulations plus operational deposit with the Bank of England. Okay. Definitions of money. When we talk about M1, the narrowest definitions of money supply consist of what? Consist of currency outside bank plus checking account plus traveller check and so on. Okay. I just go through since this is not important for final exam or midterm. You can read later. When we talk about M2, this is a broader definitions of money supply. Include M1 plus deposit and saving deposit. So saving and deposit, time deposit or fixed deposit include under M2. M3, M2 plus deposit with non-bank financial institutions. Example, post office saving. Do we have? We don't have. Other countries, they have. Example, Japan. Japan have a post office saving. Deposit of finance companies and so on. M4, okay, when we talk about M4, M4 is the notes and coin held by private sector in sterling. Okay, so this is not important for midterm or final exam. This one, monetary instrument. Yes, this is important for midterm and final exam. So you go back and read. Okay. When we talk about monetary instrument, okay, why monetary instruments is important? What kind of strategy under the monetary instruments? What does it mean by monetary instruments? Monetary instruments is a tool and instruments to implement country to control monetary policy. Okay. OMO, discount window and reserve requirement. Okay, OMO. When we talk about OMO, what does it mean by that? OMO related to money supply, which is total amount of money circulate in or existent in the country. So how to control the money supply? Usually government use OMO since your OMO is one of the easiest tools, and the result can see faster. So under the OMO is the debt security, treasury security, for example. This is the most important tools where the central bank influence the economy, money supply. So how is the process? The process is usually government will buy and sell government debt to the non-private sector, for example, corporations. Selling government bond, selling money supply will reduce. Buy government bond, the effect is money supply will increase. When the government try to buy back the bond from investor, government have to pay and government have to give or distribute, circulate the money into system, into market. What does it mean by that? It means that to answer OMO, you represent yourself as government. To answer OMO questions, you represent yourself as a government. Okay, example number 1. Okay, sell. You as a government, you sell certificates of bond. You sell certificates of bond. Usually, investor, they have to pay money and circulate the money, channeling the money into government account. Okay, when investor circulate the money into government account, money that circulate in market will reduce. Since what? Since investor, they have to channeling the money into government account. So because of this, money supply reduce. Okay, let's say government buy back certificates of bond. Okay, government, you present yourself as a government. Government buy back the certificates of bond from whom? From investor. So government have to channeling fund into market. Because why? Because they have to pay to investor. So buy government bond or government debt. This is actually government inject money into market. So when they inject money into market, what happened to the money supply? Money supply will increase, and when reach a certain point, currency will drop. Okay, so this is how, okay, this is the strategy, how to answer OMO questions, how to understand the OMO. Okay, so under the OMO, buying, selling government securities in open market in order to expand. So this is actually the common tools to implement and control monetary policy. Okay, what is the advantage of using OMO? Advantage of using OMO is usually easy buy and sell government security. Okay, it is flexible, it is precise, easily to be reserved, and in terms of frequency of use, OMO is the most tools that usually used by the government to control the money supply. Since what, it can be implemented quickly and not imposing a tax on banking system. That's why refer to the three strategy. OMO is the most frequency of use as a tool to control the money supply. Okay, next, discount window rate. You have to understand only discount window. Okay, discount window rate is the rate used between member of central bank and central bank to borrow money from central bank. Discount window rate is a rate used between central bank and member of central bank. In what? In borrowing money. Okay. In case the financial institutions is non-banking. Non-banking is not member of central bank. So as a non-member of central bank, they're not allowed to borrow money from central bank. So they can use a discount window rate or not? No, they cannot. Only member of central bank, which is bank, can borrow money from central bank, and the rate used is discount window rate. So what about the non-banking? What about the other financial institutions who are not a member of central bank? If let's say they are not a member of central bank, if let's say they need money, so how they can borrow money? They can borrow from FF market, Federal Fund market in US, yeah, Federal Fund market. So under Federal Fund market, the rate used is FF rate. So if let's say the financial institutions, they are not a member of central bank, can they borrow money from central bank? Cannot. But somehow they can play around with the borrow money from Federal Fund market. Who are the player involved under Federal Fund market? All financial institutions, including bank. Okay, so what is the rate used to borrow money in financial Federal Fund market? FF rate. Okay, so discount window rate is a tool that allow bank to borrow money from central bank. Only member of central bank can borrow money from central bank to meet short-term liquidity needs. Okay. By changing the discount rate, now we go through one by one later. Central bank can control the supply of money in the system. Example, this is an example. Discount window rate increase. Usually, do we will borrow? No. Do the member of central bank will borrow money? No. Because why? Because cost is increased. Cost is higher. They need to pay more, so they will not borrow. Can control the money supply? Yes. Money supply will reduce. What about discount rate decrease? Usually, they will take advantage by borrow more and more and more. Since cost reduce, so they will borrow more and more and more since cost of borrowing reduce. What is the impact? The impact is money supply will increase. Okay. So discount window rate increase. What about the FF rate? FF rate also will increase. Okay. Since why? Why FF rate increase? Why? FF rate it will increase because of the fund or capital that can lend out by the lender reduce. So because of capital or fund limited, fund to lend out. So FF rate increase. But somehow discount window rate reduce. What about the FF rate? FF rate also will reduce. Since what? Since they have a more than enough capital to lend out in FF market. Since usually central bank, a member of central bank, which is bank, usually will take advantage by borrow more and more and more during the discount window rate reduce, since cost of borrowing reduce. What about the money supply? When we reach a certain point, money supply will increase and it will give an impact towards the currency exchange drop. Okay, you have to understand this concept. Reserve requirement similar to the discount window rate just now. Okay, but what does it mean by reserve requirement? Like I told you just now, reserve requirements is a portions of capital that the financial institutions, they cannot lend it out, they cannot use it, they cannot do anything with these portions of money. They have to keep as reserve in institutions. Higher reserve requirement means financial institutions or bank have limited capital to lend out. So can the government control the money supply? Yes, money supply will reduce. Since bank have limited fund to lend out. Okay. Reserve requirement reduce. Reserve requirement reduce means financial institutions or bank, member of central bank, okay, or we can say bank have excess of capital or fund to lend out. What about money supply? When we reach a certain point, money supply will increase and it will give an impact towards the currency exchange, the currency value. Currency value will drop. Okay. So there are 3 points. Number 1. Okay, there are 3 points. The purpose of reserve requirement is to enable the central bank to control the nation's money supply. Reserve requirement increase. They have limited capital to lend out. So they can control the money supply, reduce, currency will appreciate. Changes in reserve requirement directly affect the amount of legal required reserve, and those change the amount of money bank can lend out. Back to you just now. Example, reserve requirement reduce. They have excess of capital to lend out. What about money supply? Money supply will increase. When you reach a certain point, currency exchange will depreciate. So here, higher reserve ratio lower the amount of fund available to the bank. What does it mean by that? It means that higher the required reserve, bank have limited amount of capital or fund that can lend out as a borrowing. Okay, so this is a reserve requirement. Okay, any questions so far? If let's say no questions, we proceed with the central bank independent. Okay, central bank independent means that the central bank decisions making or managements are without the interventions by the political party. Central bank independence means any decision making, any decisions in any issue without intervention from any political parties. Okay? Theoretical the studies suggest that central bank independence is important to help produce better monetary policy. Example, the more independent the central bank, the lower inflation rate in the economy. the more independent the central bank, the lower inflation rate in the economy. Example, in Malaysia, do we independent? No, we are not independent. We are controlled by the governments and also political parties. We know our Ministry of Finance is one of the minister, okay, and control the central bank also, okay. So we are not independent. What about US? US is the independent, okay. So what does it mean by here? It means that the increase the ability of central bank to control money supply in the economy. Okay. So in your opinion, should central bank be independent? Why central bank should be independent? Why? But it depends. Some said central bank should be independent since they can have a freedom in terms of policymaker from direct political interventions and government interventions in the conduct of the policy. With the interventions misconduct by political parties, it will give a negative impact towards the financials, economy, financials, and so on. Yeah? So that's why some of the expertise, they said we should have the central bank independent. So central bank independence defined as independent from political influence and pressure in the conduct of its functions. There are two, goal independent and instruments independent. We see what is the difference between these two. Goal independence means the ability of central bank to set own goals for monetary policy, and instruments independent means the ability of central bank to independently set the instruments of monetary policy to achieve this goal. So this is how. Okay. Some say it is very common for a central bank to have instruments independent without goal independent, but somehow it is very rare to find a central bank to have a goal independent without having instruments independent. So this is how. It depends on the country itself. Some country they say, oh, we should have a goal the central bank independence without any interventions by the political parties and so on. But somehow certain country they say we should have interventions by the government, by the political parties, since we can control and we can uh, 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 thoroughly see, avoid from any misuse or misactions by the certain parties in central banks and so on. But somehow, some say we should have the central bank independence without government, without the political parties' interventions, since we know usually political parties, they have some agenda. Usually they trying to achieve certain goals and so on. So that's why some said we should have a central bank independent without interventions by the political parties. Okay, so this is how. Okay, any questions so far? So we end of the topic 2. So this is a QR code for today. Okay, so please capture the QR code. Can you capture? If you cannot capture, please. Can you capture the QR code? Any questions so far? Any questions so far? Okay, if there's no questions, I pray for your safety. Happy Chinese New Year. Please take care of yourself. Take care of your health. Don't be so happy. You have to take care of your health. Eat nicely. Eat properly. Okay. So happy Chinese New Year, everyone, and see you next week in our next lecture. Okay, and but tomorrow tutorial 3 class will be as usual, still online. Don't worry. I'll be record also. The T3 class. If let's say you cannot join tomorrow, it's okay. You just listen to the recording, and I will show you the QR code and so on. You can capture. Yeah. Okay. Thank you so much, everyone. See you next week. Happy Chinese New Year. Welcome, everyone. Welcome. Okay, bye.